Yeah. Okay. All right. Is anybody here? Hi, everybody. Did you survive yesterday's shenanigans? Welcome all to the party. Welcome all to the program. It is Tuesday, August the 6th, 2024. I welcome you all to Stock Markets with Bruce. I'm your buddy, Uncle Bruce. I'm your friend. I really am. I am your friend. I'm here to try to interpret for you what the hell is going on and why, in plain English, if at all possible, to explain to you just what is happening in the markets, what is creating different waves of joy and sorrow and gains and losses and everything else. For those of you who are option writers, oh, isn't it great to be an option writer when you don't own stock? Have some of you figured this game out where you write options and you don't own shares and you don't have to worry about a 12.5% drop in the Japan index yesterday, and you can watch the stock market in Japan today go up 10% and sit there and go, I don't have any stock. I just write options. I write options that are worthless. I let people buy from me product that has no value. This is simple. You can't do this with other stuff. This is hard to do. I sell contracts to people that have no value, and the people who buy them from me, they know they have no value as well. This isn't like, I didn't know these options didn't have any value. Oh, they have no value. The only thing they're worth is how much time they have left to live. That's it. And that's what a lot of my people do here. They sell options that have no book value, only time value, and the odds of these contracts ever having book value are minimal. Now, I do have people who follow me here who are option writers, and they say to me quite gleefully, you know what I do, Uncle Bruce? I actually do write options that have book value. I'll write cash secured puts on SoFi. I'll write sevens or tens. But my game plan is I not only write options that have book value, they have book value and time value on top of that. And I'm here to take the time value. I don't give a crap about the book value. If I'm right and the stock goes up, if I'm writing a cash secured put and a stock goes up, well, great. That's super. I win on the book value side of the equation. But realistically, if I can bring in a lovely premium on a percentage basis against my capital that I'm putting up, where I put up 20 grand and I get handed to me 40% of that right now to put a position together that's got 6 months to a year to live or something like that. If I end up making a 25% return in 6 months, I'm a happy camper. This is a return I can't get anywhere else, and I love doing this in a conservative way. And I don't have to worry about the price of oil, how mortgages are doing, who's going to win the White House, who is even running for the White House. I don't care. I don't have to care. I don't have to care about what's happening in the UK if they have an election and a new prime minister. I don't have to care about that. I don't have to worry about global impacts in a big, big way, because my overall game plan is I write contracts that are so expensive, they're way overpriced for what they're worth, and I buy them for a lot less money. And the percentage I make is so dang good, because even at my local bank in my my hometown, my little old hometown, my local banker is offering me 1.5% interest on my savings account. Aren't they wonderful people? These are the same morons that are offering mortgages around my hometown for 7.5%, and they're trying to get away with a 6% margin on a 30-year mortgage or a 20-year mortgage with money that they're paying nothing for. These are my local bankers who are part of my community. This is how I'm going to retire. I'm going to retire investing my money with these guys. These guys are guaranteeing me one end game. That is, every dollar I leave with these guys and they pay me 1.5% interest, I'm going to lose 2% to interest right off the get, 2% to inflation right off the get-go. I'm going to lose 2% to inflation right now for every year I let them have this money. That's the first thing. The second thing is I'm guaranteed 10, 20 years from now, if I leave all my savings with these guys, I will be dependent on Social Security to survive because my money is losing value every year to inflation. These guys can't even keep up with it. My employer isn't giving me raises that equal inflation. I'm a loser if I stay with where I'm at right now. And if I go to the wealth management department of certain bankers that are available in my hometown, some of which are nationally based, Bank of America, Wells Fargo, Chase Manhattan, or whatever they're called, these wealth managers, I can give them hundreds of thousands and millions of my hard-earned saved money or inherited money or money I made on real estate or the stock option that finally came through after 20 years of whatever it was, however it came to you, you hand it over to these professionals to manage for you, and you're making 0.5% more than the inflation rate, or you're matching the inflation rate. And once in a while, the markets take a hiccup, and you have an 8% loss in 1 year after 10 years of gaining 4 to 6% a year. You have an 8% loss in 1 year, and you realize, well, when I gave these guys all my money, it was $200,000, and they built it to $400,000, and then I lost $32,000 in 1 year plus inflation. I'm really getting hammered here, and now it's going to take 5 years to get that back because inflation is going to eat up most of the gains. This is ridiculous. There are so many poor, well-to-do people. It's shocking how many poor, well-to-do people there are in this world because they've entrusted their assets to professional asset managers who have given them jack squat when it comes to returns. And that is a common tale. I see it and hear it all the time. And so do you. Many of you who've done any kind of homework through just your connections, just through your family, your associates at work, your pals at the golf club, or your friends at the bar. I mean, I don't know, wherever you hang out with, whomever you hang out with, those folks and their extended connections, you do a little bit of digging and you'll find out how few people that you have a connection with in your web of connections, how few are really doing well. Most Americans and Canadians and Europeans are upset. They're upset because they're not making the kind of returns that their parents used to make or their grandparents used to make. Grandparents from the 1950s and 60s and 70s and 80s and 90s made way better returns than we're making today, generally. Because back then there were real pension plans that guaranteed payouts to employees after 25 years of loyal service. So that existence is almost non-existent in North America. The only people that get a guaranteed pension at the end of 25 years or whatever, whenever you hit 55 or 60 or 70, firefighters, cops, teachers, civil servants, government workers for the federal government, some state employees, although many states in the United States and other governments across North America have cut benefits back, a little here, a little there, all to balance budgets. And what's happening in the world in which we live, every election cycle that happens in Canada and the USA and North America in particular, you get people coming into politics whose sole mission is to cut government spending, to cut the burden on taxpayers. And at the end of the day, what does that really mean? What's the one area that you can attack? 20-year employees of governments. You can attack them because they're powerless to stop elected officials from diddling with the rules. And bringing in Chase Manhattan to manage the pension fund for the city of blah, blah, blah. or uh, a new politician, a new governor in the state, or legislators in the state that you live, to bring in a legislation to restrict the teachers' pensions or restrict civil service pensions and so on. It's an attack on the end game for people by governments putting in less today or putting in nothing, and or shifting the burden of the pension payouts for those retirees to the private sector. And now you have, in many cases in corporate America and Canada, and now in some governments, you have you're the newbie rule. There's the newbie. You're the new joiner. You don't get the benefits that the employee that started 15, 20 years ago is getting. You're getting a new pension for you. Your pension is guaranteed by the time you turn 55 and 60 to basically put you into the camp of your survival is all contingent on Social Security, because the pension that you have is now a privately managed pension, and you can pick where your money goes, but the employer is only putting in a fraction of where it used to be a match, and there used to be a guaranteed payout at age 55 or 58 or 62 or 78. None of that exists anymore, and it's called freedom. It's called freedom to choose your investment strategy, and away you go. And now people who in their 20s and 30s who are clueless of what life is like at age 55, 65, haven't got a clue, are being tasked with the choice of how to invest for your long-term future. And 1 in 10 really study this. 9 in 10 don't even bother reading this stuff. And 1 in 10 really study it. And of those, 1 in 3 do something about it. This is the world in which we live. We have an 8-second attention span on everything we're about, including our futures. And you try to tell a 25-year-old who's just graduating out of university, and they're coming out with a $300,000 student loan that they've got to now pay off. And they haven't got a hope in hell of getting a house. They're driving a 10-year-old car. They've been working a waitress or bartendering job or bouncer job or whatever job during school to try to make ends meet. And now they're in the workforce trying to find a place to get a career going. And they're lucky to find a 30, 40, 50, 60,000 a year starting job where it costs 50, 60, 70, 80,000 a year to live. And automatically they start in the workforce with a full-time job and a part-time job on the weekends to survive. You talk to them about, well, what are you doing at age 65 for your retirement? They're looking at you going, I'm going to be alive at the age of 65. Are you kidding me? I went out with this guy or this girl, and we got pregnant, and we got a couple of kids now, and we're trapped in this cycle of economic death. We'll never get out of this. We're going to need help from our parents and grandparents, because it's no way between my career and my spouse's career, between the two of us, we can't even pay the bills. And if the interest rates go up 5% from here on any kind of economic calamity of some kind, we have 8%, 9% Fed funds rates and personal loans at 12 to 15%, like our parents and grandparents back in the 80s. There's no way. We're bankrupt. We're bankrupt. Except the student loan will never be forgiven, because corporate America has made it impossible for students to declare bankruptcy and get out from underneath that blanket. That stays with you for the rest of your life, unless a president finds a way to knock that thing off. And there are certain people who are running for president who will never let you go of that obligation, because their party never lets go of that, because that's the juice. And others who are saying, elect us and we'll knock these off. So you've got a socialist agenda or a capitalist agenda, and you decide which one you're going to go with. And that's up to you to decide. And there you go. I don't know. I'm just a guy in front of a computer in Calgary, Alberta, telling you some big picture stuff. But I have good news for you. If you're actually here, and there's 215 of you already here, so you're here for a reason. You're here for a reason. You're here to make money in the stock market. And if you're here to make money in the stock market, you believe in the notion that you can write options in a stupid market and make money from it. And you're right. You are right to believe that. And if you are an option writer, you're a winner. In my humble opinion, you're going to be a winner, because you have avoided traps of getting all hyped up about the Magnificent Seven and buying into all these stocks with everything you've got. Because, well, after all, AI is going to be the thing, and I got to get into this stock, I got to get into this stock, I want to be in the cutting edge of investing. And how many people out there have got caught holding the bag with $140 Nvidia stock when the market, the folks on Wall Street were telling all their followers, all the big banks were telling all their followers, oh, Nvidia just hit 140 a share. Hey, it's going to 160, it's going to 180, it's going to 200. Never tell you to sell. They never tell you to sell the stock. Nvidia right now at $100 a share is trading at 58 times earnings. Are they going to increase their earnings by double in the next 12 months? I don't think so. The big quarters have come and gone. Those huge, massive, incredible quarterly financials have been had for the last year. The next year, we're going to triple, quadruple their earnings again? I don't see that. I don't think so. Take a look at Apple stock. Where are we at? Closed at 209 yesterday, down $10. PE multiple 31.8. 15 is good. 17 is up there. 20 is high. This is a 31 times earnings after having been as high as 237 a share. At 209, it's still too high. This is the problem with these Magnificent Seven stocks. Tesla trading at 55 times earnings at 198. Google got up to 193, 160 right now. That was last night's close. 23 times earnings. Not bad. Not like the worst. Still expensive, but that's interesting. Microsoft, $395 a share, last night's close. 33 times earnings. It's not like 50, but it's 33 times earnings. Any faltering, any glitch, which we heard about a week ago, Microsoft's earnings did not make the street go, yeah, it didn't make it do that last time. We had issues. Meta, Facebook, 24 times earnings. That's not bad. Like Google, it's not that bad, but it's at 475. The high for this stock is 542. Is this stock going back to 542? Or is it going to sit between 450 and 500 for quite some time with a 24 times PE multiple? That's the question that has to be asked. Amazon, 161 a share, 38.4 times earnings. A high was 201, $40 higher. This isn't going $40 higher. That's 25% higher than where we are now. A $40 gain on Amazon to take it back to its high of the year is 25% higher than where we are now. And it's trading at 38 times earnings now. Not a chance. Not a chance. That makes no sense. And this is the reality of the market that we're watching. And this is why I say to my option writing audience, you don't have to own any of this stuff to write options on this stuff. You can write call spreads on some of these 30, 50 PE multiple companies where you say to the market, you traded $40 higher already in the last 52 weeks? I'll tell you what, we're trading 160. I'll tell you what, I'll write 185, 195 neighborhood call credit spreads. How about that? I'll be $25 a share higher, which is right now about 15% higher than where you're trading at. And you can move up 10% in price, and everyone will be happy with a 10% gain on Amazon from 160 to 176. That's not a bad move. But 190, 200 and something, 210, I don't think so. And you know what? I'll put together a call credit spread trade where I am 25 ahead of you, 25 ahead of you, and I'll take the 4, 5, 6% every week or two return on these spreads. I'll take nice percentages. They won't be 20% spreads. They'll be under 10%. But I'll do these every week to 10 days. 2-3 times a month, I'll do these trades. And at the end of the month, or at the end of 3 months, I'll be able to say to myself, well, you kind of averaged like 12 to 20% a month return on your money, kind of ballpark. And you're compounding it. and you're looking at your statement from your office, from your employer, the 401k you have, where you can't control that money. Your company's wealth advisors control that money for the employees. You don't get to touch it. You look at that return and go, oh yeah, well we're at 4.5% for the year. We're going to make we made 4.5% in the last 52 weeks. And you're looking at your option side here, very conservative option writing strategies, way out of the money on call credit spreads, and you're pulling in 3, 4, 5% per 10 days or so, pulling in 12 to 15% a month, going, I'm doing this much in a month. This 401k is doing this for a year. I'm supposed to retire on this stuff. The 401k is my pension plan. And inflation is 3.25%, and we're all excited about the possibility that we might see a 0.25% interest rate drop in the market. Oh wow, that's going to save everything. That's the thinking. Not going to happen. Option writers are the ones taking the money off the table from the gamblers. It's the bottom line. Welcome to the party, pal. This is how it's done around here. It might not sound sexy for you. It just might not sound exciting enough for you guys. Where I talk to you about, well, you could write options that expire this Friday, and you might buy them back on Thursday afternoon or Friday morning. You might not buy them back and just let them die Friday night. And then you'll write contracts that expire next Friday. Or today you'll write contracts that expire next Friday. But by the end of this week, you're going to buy those back. Or by Tuesday of next week, you're already going to buy those back and then write contracts that expire the next Friday all over again. Because you're taking shrinkage from here to here, letting the last of the shrinkage happen to somebody, give it to somebody else. Because you've taken this trade and pulled out a 4% yield or a 5% yield in a short period of time, and that last 2 or 3%, you're not gambling that anymore. You're now writing a new set of contracts for the next Friday, depending on the strike prices that the market tells you. You should be here now. Maybe you should be $5 higher on this spread, or if you're doing a put credit spread, you should be $4 or $5 lower on the next one, just to reflect the market moves. If that's not exciting enough for you, you're in the wrong area. What you need to do is find a YouTuber that can tell you with certainty that this stock at this price per share is going to be 10 times more valuable in the next 3 weeks or 3 months because there's a short play on it, or there's something, there's a pie in the sky, phenomenal something happening, and it's bound to go up. Well, you can do that anytime you want. I don't have those trades, unfortunately, in my playbook, but I do see opportunities here to make a lot of money from this market. And boy, I actually like it when we have a washout. I really do like it because we get rid of so many flippers. So many are eliminated, and now the hardcore investors are left. And that's where you guys come in. You guys are always writing contracts. Actually, what you want, to be honest, is what you are actually after in the end, is a boring market. That's what you actually will live for, is a boring market, not a volatile market, a boring market. Now, volatile market is action central. Lots to party on, lots of music going on, lights and balloons and confetti. A boring market is one where people grind into poverty. They grind down into nothing. And this is what option writers do. They're merciless. They write contracts that are worthless and they buy them back for very little money. And that's it. The only friend the option gambler has in the last few days of a contract's lifetime are option writers who are prepared to buy back contracts that they sold for ridiculous prices a week or two or a month or two ago, and they're willing to pay 10 cents on their dollar to buy back these contracts. And option gamblers throwing in the towel in the last couple of days of a strategy that just didn't work out. They were supposed to make 500% on their money, and they ended up losing half of it. You're the only buyer that they can find at the end of it to buy up for nickels and dimes something that was worth dollars, because you are ready to write a new set of contracts for a week or 2 or 3 or a month out or further for dollars all over again. And you play the same game each and every time. The gamblers play the same game each and every time. And gamblers who buy contracts think it's Friday night and it's a long weekend. We're going to have a big time party. And buyers of contracts and sellers of contracts are going, I love these guys. They're paying ridiculous prices to get into my casino floor and play my stupidly loaded slot machine that is never going to pay off. You're welcome. Here's a free drink. And honey, what do you think of the waterfall outside? Isn't that great? I got a water fountain show out there you can check out as you're losing your butt. Thank you very much for coming out. Thank you, everybody, for joining me this morning. How you doing? You ready to make some money today? Hopefully, you're thinking the way I am. Japan went up 10%. What can I say? Interesting stuff. I tell you, a interest rate reduction of 1/4 point by the Federal Reserve in the United States in September, and maybe another one in October, November, and one by the end of the year. 0.75% reduction in interest rates means the U.S. Fed fund rate goes from 5.5 to 4.75. That might take mortgages down 1%, 0.5%. Is that going to save the entire world's economy? No. It's going to make certain sectors more attractive, but does it mean that mortgage interest rate goes from 7 to 6%, and that means houses can go up 10% in value? Because this is what happens. You have sellers who have homes for sale who are going to say, oh, your cost of a mortgage is 1% less? Well, I'm going to raise the price of my house by 3% or 4%. I'm going to ask more for my $600,000 house that I bought for $300,000 6 years ago. I want to more than double my money. This game doesn't work for investors and for home buyers. Interest rates down by half, not by 0.5 point, but by half. If we go down to 2.5 to 2.25% interest rates, well, at that area, you've got mortgages in the 3.5% neighborhood. Now you're talking. But a mortgage of 6% versus 7, or 6.25 versus 7.25, that's not going to save people, because the problem is their wages at work are only going up 2 to 3% per year. Inflation is still going to be 3% a year. There's a break even, and the cost of home ownership will continue to rise as governments need to raise taxes. If the elected officials can't get it out of you from the income tax deduction, then they'll pass it on to the community that you live in. The community will get less funding from the state. They'll have to raise money from their angle. And what angle do they have? Property taxes and an increase in the sales tax on top of the state tax, if that state allows it. That means certain communities in the U.S. become much more expensive to live in than other communities. And we got us a problem, Houston. There's one other problem, too. If your house goes up in value, of course, your house goes up in value, your taxes go up. Your property taxes go up anyway, because it's based on the value of your house. But so does your insurance for the house, because the insurance policy you have has to cover the replacement cost of your house. And if your house is going up $10,000, $20,000 a year in value, your insurance premium is going to go up. And so to be a homeowner, to then rent it or to live in it, you're going to pay more, and it's more than what you can get from work. That means home costs to you, living costs, are higher as a percentage of how much money you generate from work. This is an economy in reverse in another way. It's invisible. It is not headline news. It is, you don't see people picketing City Hall when they get a $200 a year price increase on their annual tax bill from their city. This is one of those invisible job killers. And it's everywhere. As a matter of fact, communities who are poorer have a harder time than communities who are affluent to make it work, because poorer communities have a tougher time collecting taxes from delinquent homeowners who are delinquent on mortgages and property taxes and maintenance and so on. Round and around we go. Option writers, you actually don't have to care. I mean, ridiculous to say it, but it's true. If you are able to quit your day job because you can write options and bring in more income to your hands than working full time, you have reached the Shangri-La moment of your life. This is the great equalizer. This is the liberator for you guys. And you have to learn how options work and how they trade and how they depreciate and how they expire. And Why sometimes options don't go up like stocks go up. Sometimes stocks go up, but the options that you either own or written don't appreciate like the stock does. This is the power of the stopwatch, the clock. The clock is kryptonite and you own it. You have the kryptonite in your hand and you are giving a little piece of kryptonite to the option buyer that just bought your contract from you. It's attached to the contract and it's deteriorating it. And the buyer is going, why is this contract not reacting? The stock is lifting, but they have forgotten the fact that the time factor is killing them. You know that as an option writer. You learned that here from the classes we have on our website and being on this channel. Thank you so much for joining me today. We are a half an hour away from opening up for the day. Giddy up, everybody. We've got money to make here. Oh, by the way, there's this talk. I don't want to confuse you and I don't want to sidetrack you, okay? You don't have to worry about the size of the U.S. deficit. You don't have to worry about how the bond market is doing. You don't have to worry about whether countries around the world will buy U.S. debt to keep financing the U.S. government. As option writers, you're making money whichever direction the market is going to go. That's the other secret to success with option writers. You go with the flow. You go with the markets. The markets want to go down. Oh, okay. You want to go down. I'll write call credit spreads. The market wants to go up. Oh, I'll write cash secured puts. I'll write put credit spreads. The markets, you see a stock that you like and you want to be involved with it because it's really backed off. You'll buy deep in the money calls on that stock out till 2027 if you can, and you'll write options against it. And you'll bring income against options that you're holding for long-term gain. You'll bring income in the meantime, which will reduce the actual exposure to the contract that you just purchased. How simple is this? If you are a fan of Nvidia going forward for years and years and years, and the stock's right now at $102 a share, and it has a bad week this week, and it goes to $92 a share, and you buy $50 contract call options that are good till way out there, 2026, 27, and you can buy them under the 90-10 rule that we talk about here with my classes. You're sitting there going, yeah, I can buy these contracts for like $48, $50 each. I can write contracts on these contracts rather than on the stock. Instead of buying the stock for $93, I can buy double the number of contracts. In other words, instead of owning 100 shares, I can own 2 deep in the money calls, which represents 200 shares instead of 100 shares. I'm now writing 2 calls against these 2 calls that I just purchased, instead of writing 1 call against 100 shares. So instead of spending $9,300 on stock, I'm spending $9,000 whatever on 2 options, and I'm writing 2 call options right now for income against the cost of this investment of $9,000 something dollars. It's double the return of your capital is what this is. This is what I'm talking about here. The leverage is in your favor. So if you can afford to buy 1,000 shares of Nvidia at $93 a share, 93 grand, but you can afford to buy instead 20 deep in the money calls on Nvidia, you're not going to write 10 call options. You're going to write 20 call options. The premiums on these are pretty good. You might be writing $100, $105 call options. Good for a month or 2. You bring in $10 a share on a contract. It's $1,000 a contract times 20 contracts. You just brought in $20,000 against your $90-something thousand investment up front right now. What do you do with the 20 grand? Sit on it, collect interest if you like, or buy more deep in the money calls. Maybe you'll buy another 20 grand worth of deep in the money calls and write options on those, so that when they all expire and you bought them all back for pennies, again, that's the strategy, you're now not going to write 20 calls again. You're going to write maybe 25 calls, where if you had bought the stock, you only had 1,000 shares. You only wrote 10 calls. Here you bought 20 calls, wrote 20 calls, bought more calls, maybe 5 more, and wrote 5 more, and now writing 25 as a rollover. Welcome to the growth of your account. This is conservative stuff. There's no margin required here. You're not borrowing money from the stock market. You're not gambling on the direction of the overall index. You're sitting on deep in the money calls that have 2 years of life left in them, and you're going to write contracts on them every 2 to 3 months. You're going to do 4 a year, ballpark, maybe 5 writes a year on average for the next 2 years. That's 10 rollovers of contracts on these contracts themselves. And at the end of their, as they come into their last 6 months of life, you're just going to sell these calls and buy these calls that are now good till 2029. And you're extending the lifespan of the new contracts. You had 35 or 45 or 50 of them by the time you did the rollover. You now have 50 of these 2029s, and you're writing on those for the next 2 years. Take the classes if you want to learn how this is done. Go to my website, stockmarkerswithbruce.ca, and learn how this game is played. There are 17 classes there. They're $150 a piece. You will take them, you will watch them, you will rewatch them. You will open up a practice trading account and trade in there. And then you will write on your own. You'll start learning how to write options. You're going to need to take more than 1 or 2 lessons to understand how poor man cover call trading works. You're going to need more than a couple of classes to understand how rollovers work. You're going to need more than 1 or 2 or 3 or 4 classes to understand a lot of the intricacies of this market, stink bids, stink offers, the psychology of your opponent to grasp this business. Because I know many of you have spent years trying to figure out how the stock market works, and you've done it the hard way by yourself. You've just watched CNBC, and you've watched Fox Business, and you watch Bloomberg, and you read the New York Times, and you read the Wall Street Journal, and you follow YouTubers and follow me and others, and you're trying to figure out how the stock market works. And you've got a little gathering of this and this and this and this and this and this. And then some of you start watching my classes on options, and you realize this guy also talks about the stock market too, because options are related to the stock market. Stocks trade in the market, options trade in their market, and the two are linked together. And so you realize very quickly, if you start watching my 17 classes, you're going to figure out I'm learning a lot about the stock market at the same time I'm learning about the options market, because they're connected to each other. You have to know how one works versus the other. Otherwise, you're clueless. And this is where the payoff really comes your way, because these classes, of which there are 17 right now for you to enjoy, will give you this information that you will take with you now for the rest of your life. You don't have to take 20 classes every year for the next 10 years. You're not signing up with a program where I'm telling you, yeah, you got to take 17 classes and 150 a piece, and then I got 17 more for another 150 a piece, then I got 17 more for, because it changes all the time. No. The knowledge you gain on how options writing works is knowledge you will use with you for the rest of your existence. If you're in your 40s, your 30s, your 50s, you got 10, 20, 30, 40 years of time in front of you. How healthy are you? You're going to use the strategies that are in these classes into the 2050s, the 2060s, the 20, I don't know how far out. I'll be long gone, and you'll still be using these programs. Because what I'm telling you about, what I'm showing you here, has been the way it's been done since the 1970s, 80s, and 90s. The difference is now everything is done on this. It's not done by a telephone where you dial your stockbroker anymore. It's all you doing your trades, wherever you are, anywhere on this planet. The liberation of the investor has been freaking phenomenal. You can get on a plane, go to London, go to Dubai, go to Australia, go to Africa, go to South America. No matter where you go, you can trade your options anywhere, whenever the markets are open, from any location. When you got internet, you're good to go. You don't need to call anybody to make your trades. Talk about a change in the world. Thank you, iPhone. Thank you, this device. A computer and a telephone and a camera all in one. It plays music. You can watch YouTube videos. You can watch cats fall down, puppies being cute. You can watch car chases. There's so much you can watch on this thing, and you can trade your options. You want to take the rest of this year off, and next year and the year after, and be in an RV now for as a full timer. You can be a full time RVer. You can write options at the next campground or the next truck stop, or your passenger. you're driving, and your spouse is over here trading options as you two are talking about the market while you're driving today. You decide. It's totally your call wherever you want to go, whenever you want to go. This is the new normal, the new world. I'm an old guy trying to tell you about an investment strategy that's been around for decades, 50 plus years, that has now been adapted to this new age. And there are, of course, multi-billion-dollar institutions out there, tens of billions, who are doing this work, this option trading work in commodities, treasuries, bonds, and stocks. I'm trying to get you to be a stock option writer on a retail level. And if you can bring in 10,000 a month in regular capital from writing options out of a $5 trillion a week turnover market, you will never work for anyone ever again. You will be fully retired, semi-retired, or self-employed, whatever you call yourself. You might be 75 years old, writing contracts for income more than your Social Security, more than any pension you've ever had, more than any Roth IRA setup you've ever put together. You're bringing in more capital from option writing than everything else you've ever put together. And you call yourself retired, or you don't. You call yourself self-employed, partially retired. Those in your 50s, those of you in your 50s who thought you had to work another 10 years, or you thought before you found me, you thought, oh, I'm going to have to work until I'm 70, man. I'm going to be let go at my office at 65. They're going to kick me out, and I'm not going to have enough to retire on, and I'm now going to have to work for another 10 years as a greeter at Walmart because my Social Security and my pension against my overheads and the medical bills we have and the obligations we have, I got to work until I'm 75. And now you find this channel and you go, oh my God, I can rearrange my finances where I can control my own money and I can write options on my own with assets that I have. I can make more money per month than I'm making now at my office at the height of my career today. And I'm 54 years old, I'm 56, I'm 51, I'm 59. I can be out of here in 6 months on my terms rather than their terms. I'm not waiting until I'm 65 to be fired, laid off, furloughed, bought out, whatever the term. I'm out now on my terms. I'm out of here. Thank you very much, but I'm gone, guys. Get another sap to do this work because I do the work of 4 people and you won't pay me for it. Those of you in your 30s and 40s, look, guys, you don't have the millions of dollars that you think you're going to have when you hit 50, 60, 70. You've got thousands of dollars that you're managing now. You're going to learn how options work today. You're going to understand how option trading happens. You're going to become writers, but you have to discipline yourself to think like a 65-year-old. You cannot afford to lose a dime of your money. You've got to think that way as an option writer, which means you have to train your brain to become a very patient, deliberate option writer. And if you can work on that, if you can perfect that, you will do extremely well. Some of you are born this way. You're already an old soul now. Great. But those of you who are just full of vim and vinegar and you want to change the world and everything, you gotta understand what you do and do not know. And you've got to buy into the notion that you know jack squat, and for the next 5 years you're on a learning curve, and that you're nobody fancy. You're just who you are, and that you're buying into the program that you're the newbie, and that you're prepared to pay the price to learn, absorb, keep learning, and you're good at it because you survived university. You're continuing to learn and observe and begin to trade on this side of the market instead of the crazy side of the market, and you're going to turn yourself into a casino. Hard to do for some of you. I know it. I get told all the time. Thank you all so much of you who are here today. I'm glad to see you here. A lot of comments coming in on what my comments were. A lot of you talking to each other and comparing notes. I'm just stoked about all of it. Thank you all for joining this channel. Those of you who are here just watching and wondering what this old guy talks about all the time, I welcome you with open arms to the show here and to the channel. If you've been here now a little while, you've followed me for 3 months, 6 months, a year, you've become a subscriber of this channel, I thank you. If you haven't become a subscriber, please subscribe to the channel because you will get alerts when I go on live. You may want to hit that button that talks about alerts. But if you really want to know what we're talking about and what's really going I would recommend that you become a member of this channel. If you become a Chillin' with Uncle Bruce member, you'll get alerts every time I go live. And I go live for all of you at 8:30 Eastern Time. If you become a gold bagel follower of this channel, you step up to the highest level of membership I've got, which is this level right here. You're going to drop $25 a month to YouTube to become a Gold Bagel member. You're going to get an alert every morning to join me a half an hour at least before this show starts so that I can talk to gold level members of this channel only for the first half hour to give you my trade recommendations or thoughts or ideas or react to your questions and give you a heads up about what we're going to talk about on the big show when everyone else comes in. You'll also join us Wednesday nights at 7 o'clock Eastern Time for the primetime live show only for Gold Bagel members. That's exclusively for you for the price you're paying. And if you're a Gold Bagel member, send me an email at brucefarman@hotmail.com if you would like to become part of the Discord group. If you'd like to hang out with the folks, there's my email right there. You want to become part of the Discord group and talk about options writing 24/7 with other gold level members and option writers, send me an email right here. Tell me your name. Tell me what your name of your gold channel is. What are you called? Because some of you use your name, some of you don't use your names. That'll confirm to me you are a Gold Bagel member. I will then send you an email back with a link to get you into the Discord group. And now you can hang out with the Discorders and talk about poor man covered call trading, cash secured put trading, credit spread trading, covered call writing, all that stuff. You can talk about brokerage firms. You can talk about commission rates. You can talk about how does he look? Does Bruce look okay to you? I like his channel. I hate his channel. I love him. I hate him. Whatever. I'm not there. It's your discussion group, and you can hang out with yourselves when I'm not on the air and do what you like. Again, up to you how involved you want to become in this area of the markets. Okay, it is a huge area where you can really succeed and make a killing. There are a number of people here who you never hear from. There are a number of Gold Bagel level members right here who have faithfully and loyally stayed members for years of this on this channel, and you never see their name over here on the chat bar. You can tell members by their green title and the avatar beside their name. They're members, but rarely do these people ever make a comment. They are a silent group of option writers who do not communicate to the outside world all that much. They're very focused on what they do. They will follow my thoughts and my opinions and then decide what they do with their trades. There are millionaires who watch this channel, quite a number, who have done extremely well and do very, very well, who you will never talk to. They will never communicate out that they're here. They follow this channel. They write options. They contact me from time to time, either privately or we have a one-on-one from time to time. But generally speaking, they're very busy. And when they do an option trade, they're taking out tens of thousands of dollars a trade, not hundreds or thousands of dollars. This option business is limitless. You will never dominate this business, no matter how great you become as an option writer. It's unlikely you'll ever be a factor where you affect a market. I just don't see that happening here. I do see what's happening with so many of you who've gone from this middle class world where you were working a job or two jobs and you were cash flowing your way around, and you began to reorganize your assets so that you could write more calls sooner rather than later, and you adjusted your portfolios to do credit spreads or poor man covered call trading or cash secured put trading. And a number of viewers from 3 years ago, when this channel started in May of 2020, and started to learn how options work by about April 21, May and June of 21, to now have gone from that early writing 2, 3, 4, 5 contracts at a time to now writing 20, 40, 50 at a time over multiple entities at the same time. You've transformed yourselves completely. You don't recognize your economic situation from just 2 or 3 years ago. It's completely turned over, and you've now moved into a much higher level. And you know who you are out there. You've done well, you're doing well, and you're going to continue to grow your cash flows. And I say, welcome to the party, pal. Glad to have you all here. But every day, there are new people who join this channel who've never been here before. They look at this channel and they go, this guy is so goddamn boring. He has nothing going on with graphics. He has no quotes going across the screen. He just sits there and talks to the computer, and he reads these comments most of the time. That's all this guy does. I don't understand it. And then after a few days, they get it. And they go, oh, well, yeah, this guy is giving us the pre-market chat 1 hour before the opening. And then he's here for the first hour of trading to help us figure out what the hell is going on. This makes a lot of sense. I'm the trader is what you guys figure out quickly. You figure out, oh, well, I'm the trader. Now, he's not the trader. He doesn't trade anything. He's a commentator. He's giving us his opinion. He's not in conflict with me. He doesn't try to outsmart me with his option rights and cut in front of me to sell or buy or trade something he doesn't even talk about. This guy doesn't trade. This guy is an educator and is an opinionator. And you know what? It's a refreshing, for me, it's a refreshing viewpoint versus others. It's up to you. You might be more interested in your television networks that you follow or read your publications, or you're following podcasters or whatever. It's all good. The information can come at you from a million directions, including this direction here. But if you're hanging out here with 270 other people right now, you're hanging out with a majority of option writers. That's what this channel has become. This channel has become a family of option writers predominantly. And we follow the market from a different angle than other channels follow the markets that are out there. And that's all it is. And we don't have 50,000 people watching at the same time, because to become an option writer, you have to study. You have to do some investing in yourself to learn how to become an option writer, to be successful at it on a consistent basis. The good news is you can start taking classes whenever you want, going to my website right here. And after you take the first 2 classes, just right after the first 2, you can easily start trading options risk-free by setting up a practice account with a zillion of these online platform guys. And you can begin to set up your trading account through whichever platform you want to use. And a number of my viewers, a high number of viewers on this channel, started writing options right after class number 2. And then they took 3 and 4 and 5 and 6, and they became more and more knowledgeable about the business. And after you've grabbed 5, 6, 7 classes, you're going to do all 17. It's only a matter of time. You're going to take them all, and you're going to absorb all this information. You'll rewatch a bunch of classes just to kind of remind yourself, what did he say about rollover strategies? And what did he say about these iron condors and these credits? Oh, yeah. I watched. You'll do that. that is the constant learning curve that you're on as you keep bringing in the info that you need to get a grasp on what this market is about and what's going on with it. Thank you all for joining me here today. We're watching all kinds of stuff. As you have figured out, those of you who weren't sure yesterday, you sure know now. We watch all kinds of other stuff going on out there to see just where this market might be going. Apparently, Kamala Harris has chosen Minnesota Governor Tim Walz as her running mate. There you go. So it's it's Harrison Walz for the Democrats. There you go. The Dow is up 53 points. S&P is up 19. NASDAQ is up 65 at this moment in time. Very slight gain. JP Morgan is warning investors that the unwinding of the yen carry trade is only about half done. The other half needs to be done. That's their guesstimate. That's their thought. We talked about this yesterday. We'll keep watching for that. Oil is down 56 cents a barrel again. It was up early this morning. We're now at 72.38. We could be under 70 a barrel in the next few days if the deterioration continues on. Don't know if it will, but it has come down from the 83, 84 range in a month to here. So it's been quite the drop so far. Welcome all to the program. Just a quick recap of some of our favorite stocks. What are we looking at right now? Rocket Lab lost 15 cents yesterday. It's up 21 this morning. SoFi lost 11 cents this morning. It's up 11 cents in the pre-market. GameStop lost 42 cents yesterday. When it was all said and done, GameStop gave up 42 cents. It's up 61 right now. Matterport lost 17. It's up 2. 23andMe lost 1.6 cents. It's up 1.5 cents this morning. Spire lost $1.27. It's got 24 cents back at $11. ATIP lost 12. It's down 1 more this morning. SmartRent was down 7 yesterday. It's up 2.5 now. Apple lost 10.59 yesterday. It's down 2.72 this morning. 206.50, and we were under 200 for a little while yesterday morning. Tesla lost $8.79 yesterday. It's up $3.12 now at $2.02. Microsoft was down $13.34 yesterday. It's up $6.50, about half of the way back, $401.67. Alphabet was a loser of $7.76 yesterday. It's up 49 cents this morning. Amazon was down $6.88. It's up 31 cents this morning. Nvidia down $6.82 yesterday. At the end of the day, it's up $3.50 this morning. 103.97. Meta, the Facebook company, down 12.41 yesterday, up 6.81 this morning. Goldman Sachs lost 11.60 yesterday. It's up 3.79. Cisco was down 1.92 yesterday, up 11. Arc Innovations down 1.62, up 48 cents. Pfizer down 70 cents yesterday, down 4 more now. HBQ down 97 yesterday, is up 32 this morning. Unity down 84, it's up 18 now. AI lost 53 yesterday, it's up 22. Adobe down 16.80 yesterday, up 4.68. The Spider Index lost $15.50 yesterday. It's up $2. The Qs were down $13.30. They're up 2. Netflix down $15 yesterday, up 4 right now. IBM lost $5.80. It's up 28 cents. Vanik down $5.12, up 3.24 right now with 2 minutes to go before the opening. Home Depot down $5.40 unchanged this morning. Enphase down $1.80 yesterday, up 4 cents. Palantir lost 65 cents yesterday. It's up 3.10 this morning. And Uber down 51 cents yesterday, up 3.92 this morning. So we got some stocks doing rather nicely, others gaining partially, some gaining all of their losses back. It's a mixed bag. Companies with cash on hand, no debt, and growing balance sheets are improving, and that means Rocket Lab, SoFi, GameStop, they're gaining on the markets because they have very good balance sheets, and as small companies are growing their business. The rest of them, we'll see. The Magnificent Seven, 6 are up, 1 is down. The loser is Apple. We are about to open for trading to get this market started on the session. Welcome to the party, everybody. Nice to have you here. Hope you get nothing but filthy rich today because this market might be handing you some upside potential. Thank you all very much. Larry Titus, I think, is waiting in the wings to hit the bells to let the world know it's time to trade for some dinero. Thank you guys again for your support of this YouTube channel. If you have become a new member of this channel, thank you. If you become joined this channel as a joiner for Chillin' with Uncle Bruce level or Gold Bagel, thank you very much. There we go. Larry has hit the bells, baby. Ding, ding, ding. We're up and we're going to start trading. I see GameStop at $20.95, up 30 cents to start the morning. Tesla's at 200 a share, up 120. Spiders are up $1.50 or so. I've got Meta up 375. I've got Nvidia up 320 or so. AMC's up 8. Google right now down 13 cents. Nothing serious happening in the markets for now. Welcome all to the program. Canopy is up 24 cents in case anyone wants to know, says Flair. Richard Carlin, neat. The Knights of Knee are in charge of this market. We're up 12 points on the Dow. We're up a dime on AI. We're up 20 cents on GameStop. Now we're at 2065, 2075. We've been as low as 2056 so far and as high as 2105 on GameStop. We're at 2077, up 12 cents, now 2079. As we figure out where we're going. SoFi down 3 cents. 651, now 650. Volume 1.8 million in the first minute. We'll see how this plays out as the morning grinds on. Nvidia's up 312. Rocket Lab up 8.8 cents. Matterport up 4. SmartRent up 2. We've got Apple down 340. Tesla up 16 cents. Google up 24. Microsoft up 528. Got Netflix up 820, Meta up 650, Amazon up 43 cents. So this is good for NASDAQ. This is good for the Qs. This is good for the SPYs, of course. SPY up 192 and Qs are up 288 right at the moment. Uber up 314, Adobe up $6, AMD up 2 cents, Unity down 3 cents, Enphase down 21 cents at the moment. Moderna down 129, Cisco up 27, Pfizer down 11, IBM up 110. HPQ up 6, Home Depot down 89 cents, Vanix Semiconductors up 310, Goldman up 80, Boeing up 58, Target down 44, Costco up $9, Walmart up 44 cents, Disney up 43, American Airlines up 9 cents, AMC up 3 cents, DraftKings up 35, Royal Caribbean up 620 to 146. Good gain on the cruise ship company. We're down 3.4 on the Dow Jones. AI up 9. GameStop back to 2104. Now approaching the high of the day of 2106. We're up 39 cents at the moment on GameStop. Volume 690,000 is the volume. Not even a million yet. And it seems to be up about 35, 38 cents. Tesla up $1.40. Trying to climb. Meta's up 640. Nvidia's up 425. Good morning. It's a good start. So far, nothing serious on the sell side at all. There you go. Welcome, everybody. Nice to have you here. Luckily, dude says, I remember the rule number 1 yesterday. Always be writing. There you go. That's it, baby. Always be writing. Take the money from the gamblers. Put the gamble on their shoulders. Let them be the gamblers. Take their dough and sit tight and see what they want to do with it. Thank you all very much for being here today. Thank you for those of you who've been hitting the thumbs up button for us and also answering the poll question. We have 115 thumbs ups. I thank you for that, everybody. We have the poll question. The stock markets will be higher by the end of the year. 243 votes already here. 79% saying, yeah, the markets will be higher no matter what happens. By the end of the year, the markets will be higher. Only 21% think the markets will be lower. And there you go. There's the underlying feeling of 243 respondents already to the poll question. Bring it on. Let me know what you think. Tell me your thoughts. We're up 13 points on the Dow. AI down a penny. GameStop 2091 up 26. SoFi at 646 down 9. Nvidia up 398. Rocket Lab and Matterport are higher so far this morning. Google's still down 70 cents. Nvidia up $3. Meta, Facebook is up 5.75. Microsoft is up $5 to 400. We have Tesla down 25 cents at 198.59. So we got some fluctuations going. Dead cat bounces, maybe not. We got realignment going on. We got people trying to focus in on where am I going to hang out and where will these stocks go. Welcome, option writers, to the show. Nice to have you here. 265 of you are in the house. Welcome all of you to the program. Thank you for those of you who have become members of this channel and commenting right here, right now. Thank you for those of you who are upgrading your membership from regular member to gold level member because of the morning show, the Wednesday night show, and for being part of the Discord group. I thank you all. Let's see if we can get any of you a little richer today than you were before. Opportunity knocks. What can I say? Thank you again for your participation of this YouTuber's channel. A 34-point gain now on the Dow. It's definitely moving up at the moment. AI only down 7. GameStop at 2086 up 21. And SoFi 646 down 8 cents. Nvidia up 239 at the moment. Giddy up, folks. That's what we got going on. Matterport is up 7 cents. Spire up 39, so 11.15 again. And waiting to see what else is going to go here. Apple still down 4.20. Tesla down 41. Microsoft up 6.60. Google down 96 cents. Amazon down 19. And Nvidia up 2.33. Facebook, Meta up 4.60 right now. Any other significant changes? We'll see if we can find out here. AI down 13 cents. Nothing much going on there. Adobe up 2.50. We're up $8.80, $9 now. 9.20 gain on Netflix. It's looking all right. 6.07 right now on Netflix. 122 gain on IBM. Vanik up 163. We're up 220 on Palantir, sitting now at 26.33, and we're at 61.05 on Uber. That's up 250 a share. High of the year on Uber, last 52 weeks, 82.14. There's a $21 pullback on Uber, and they just came in with nice financials. Very nice financials. So interesting how that's working. Palantir is still about 350 behind its high of the year, 29.83, sitting at 26.40. But it had a good financial quarter as well. This stock might want to reach new highs for the year. We'll see if the rest of the market is in a mood to recover any more of these losses from yesterday. The Dow now up 104. That's a good sign. Up 104 on the Dow. We're up 18 points on S&P. And we're up 10 on NASDAQ. Now, the Dow is up 1/3%. S&P is up 1/3%. But the NASDAQ is only up 1/10 of a percentage point. So the NASDAQ has some climbing to do. Maybe it just started a little pop up here. Oil down 61 cents at 72.33 right now on oil. Oil under pressure. The VIX is back to 32.3 after topping out at 65 in the pre-market yesterday morning. We are down 6 points from that 38-point close to 32. That's a 16% improvement on the VIX, which tells me this market can go up today. It could go up quite a bit more than what we're showing at the moment. At the moment, I think we're just eating through any of the sellers that are being blown out by their brokers on margin calls. I get that impression right now that is what we're witnessing. This is not a negative start. This is going to be a positive day. And the VIX is telling me that more buying, the buying will keep coming in and the selling will dry out. And all of a sudden we'll have gaps. And don't be surprised that the market moves higher. That's what this guy thinks might be going on. We'll see for ourselves here in the next hour or so just how this first hour goes by. 9 minutes into the session, kids. 9 minutes in. We have 121 thumbs ups and we have 248 people responding to the poll question. 79% of you out there are telling me that you think the market will be at a higher level by the end of this year, no matter what happens in the meantime. I think you're right. I think the markets will be higher, not lower, by the end of the year than where we are right now. Thanks everybody for being here. Giddy up, giddy up, giddy up, giddy up, giddy up. Anyway, there you go. All welcome to the program this morning. Your buddy Uncle Bruce is here, watching what's going on. And we'll just see just what this market is made of. What's this market wanting to do? How will it improve or deteriorate? Japan recovered almost all of its losses, so that is a good sign. We'll keep an eye on that. All right, everybody. Welcome to the program, everybody. Nice to have you here. Here we go. We're up and running. We're up 2.5 cents on Rocket Lab. We were up 20, 30 cents in the pre-market, so we'll see if that kicks in. Down 12 on SoFi, up 16 on GameStop, 2083, up 18 cents right now. Just broke 1 million shares of volume on GameStop. SoFi volume so far this morning at 643 last trade. 3.3 million, the low was 640. We've come back 3 cents so far on SoFi. The Matterport is up 6.5 cents at the moment. Okay, everyone? Thank you all for joining in. Mortgage rates plunge to the lowest level in over a year amid recession fears. Is now a good time to buy a house? Is the question. I don't think recession fears are on the table. I really don't think so. A recession is 2 consecutive quarters of negative growth. For the U.S. economy, we're nowhere near flat. There's no recession in the offing. An economic slowdown has been talked about for years, and maybe we have slowed up a little from the recovery after COVID. That was expected, after all. But have we gone negative? Nope. We have not seen the U.S. economy go negative at all. And I just don't see a recession in the future. And if the Fed can ease up on interest rates and or even ease up on quantitative easing, that would put more capital into the market very quickly. I just don't see the U.S. economy going into a tailspin. I don't see it. There you have it. All right. Thank you all. Welcome, everyone. Bobby Atkinson, this ELF earnings are coming out today. The one stock that went up yesterday on my watch list. Welcome, Bobby Atkinson, to the show. We're up 78 on the Dow at the moment. AI down 16. GameStop has gone negative now. A nickel, 20.60. The low of the day, 20.56. That's the rate. There's quite a bit of buying interest for the stock between 20 and 20.60. There's a lot of buys here. On the sell side, it could easily pop 25, 30 cents at any moment. The sell side is really not all that dominant. But the market fluctuates. We are kind of waving here. Kind of expected. That's what I've been thinking. 643 on SoFi, down 11. Nvidia up 62. The VIX has been indicating a stronger day today than yesterday by far. We're at 32.36, down 621 on the VIX. So it looks like the VIX has calmed the hell down from the 55, 65 range to 32. Still high, but it is backing off, and that is a very good sign. Right now, the Dow is up 60, S&P up 10, and NASDAQ is showing a 47-point loss, which is 0.25 percentage point. And I think it's this first hour jitters we have to get through. We're 13 minutes into the hour at this point, very early in the day. The NASDAQ is now only down 36. Now it's down 33. I'm not seeing a massive, desperate wave to get out of this market. I see actually bargain hunters trying to get into the market right now. All right, we'll follow that. Let's take a look at what the Dow is doing here, up 45 points. The winners right now on a percentage basis would be Dow Chemical up 2.3, Walt Disney up 1.7%, Caterpillar up 1.5%, Cisco up 1.4%, American Express up 1.3%, Microsoft up 1%, and Nike is up 1%. Those are 1% or more winners. There's like 8 of them there. From here, 0.89% down to 0. That would be Chevron at 0.3, Goldman up 0.15, JP Morgan up 0.25 point, Salesforce up 1/3 of a point, Travelers 0.37, International IBM is up 0.4, Honeywell up 0.44, Coca-Cola up 0.5%, Verizon up 0.6, Procter & Gamble 2/3 gain, Walmart 2/3 of a percentage point gain, McDonald's 0.8, Intel 0.89. All positive. On the negative side, there's only about 10 stocks. The worst performer, believe it or not, Apple, down 3%, down 638. And I wonder if that's going to end very shortly. I'm not sure if there's going to be enough stock coming in at these levels. We're down 638 on Apple, down 3%. Amazon is down 1.1%. United Healthcare down 0.93. So very few stocks anywhere near 1% or worse, like three of them. After this, 3M is 0.78 lower, Boeing 0.58, Home Depot a third of a point, Amgen a quarter of a point, Merck a fifth of a point lower, Visa 0.15, and Johnson Johnson 0.12. Those are the losers, and there aren't many of them to wonder about. The Dow up now 112 as it is going higher. If Apple turns it around, then we are popping everywhere. We're up 11 on the S&P. We're only down 29 on NASDAQ. So we really are not seeing a bloodbath at the moment. Apple is down 740 at 201.80. Tesla down 530. Google down 240. Microsoft up 460. Netflix up 348. Meta up 470. And Amazon down 231 with the Dow up 68 at the moment. There's the story. I'm sticking to it. We're going to see how this plays out. And we'll follow this market as the day wears on. And I wish all of you nothing but the best. Want you all to get richer from option writing. Take the moolah and say thank you. GameStop right now, near its low of the day, at its low of the day, 2026 at the moment, down 30 some odd cents on GameStop. This is the low of the day on GameStop, down 38 cents a share. 2028 now 2034. It's bounced off the lows. Volume 1.2 million. SoFi at 642, down 12. The low of the day, I think 640 so far on SoFi. Volume 3.29 million now over there, and maybe a little more than that. There is the early indication of what's happening so far. Kamala Harris has chosen Minnesota Governor Tim Walz as her running mate for Vice President of the United States. So Midwest choice there, safe choice by the Democrats from what I see. Have a feeling most of the Democrats will be very pleased with that selection. It is not controversial, and that's what they wanted, I think. We're up now on the thumbs up meter, 125. Thank you, kids. 75 more, and we got 200. We broke 200 yesterday with the rerunners. Thank you all for coming through for us. And for the poll question, 260 votes. 78% of you are saying the market will be higher by the end of the year, Bruce. Only 22% think the market will be lower. 78% saying we're going higher. There you go. We'll follow that. Thank you all for being here. That's it. Hector, good morning. All Uncle Bruce, I did not receive an email link to the Gold Bagel Member Show this morning. And I've heard that from two people now. Again, I put the links out there, and sometimes YouTube doesn't do it. It frustrates me because I don't know that. I have no idea. The only way I could possibly know is if any of you send me a private email, maybe 5 or 10 minutes before I go on the air for the Gold Bagel Show or this show. And if you don't have an alert within 5 minutes to go, that's the only way I'll hear about it, because YouTube does not tell me whether they sent it or not. I see on my YouTube channel the alert is there. It's showing the alert went out, but it didn't tell me whether everyone got it or didn't get it. And this is where I'm confused. I do not know why this happens. The only thing I can mention to people is sometimes some of you get updates on your phones through your devices, and sometimes these updates come preloaded with a junk setting that immediately kicks any announcement from me into your junk folder, and they think you don't want it. And again, I'm guessing here just off the seat of my pants. I have no idea if this is true or not, but a number of you have let me know that you've noticed in your phone settings, your computer settings, your iPad settings, wherever you expect the alert to come from, that there's been a change in notifications in your notification settings that has directed YouTube messages to you as junk, and you're not getting them. Again, I don't know. You might want to look into it, see what's going on. You can always go on without an alert if you know the approximate time, and that is true. If you're a member of this channel, you know what time I'm supposed to start. You can kick in. I did start 15 minutes early today, though, so some of you were caught off guard with that. DH Ruta, go to your community tab, check your community tab, check your YouTube settings. Go to your YouTube icon on the top right-hand corner of your page and look at settings up there to make sure everything is good to go. And then look at your telephone or computer alert settings from there. Again, I don't know how to tell you to do this. I'm only telling you what I hear and what some people tell me is happening, because I'm not your expert in that area. I'm just guessing as to what's really going on. Thank you all for joining in on the show today. I can tell you my views today are much lower because the market is not crashing. Yesterday morning, we had a surge of views. Very concerned people wondering what was going on in the market. This morning, the market is up and concerns greatly alleviated. And so the views this morning are quite a bit lower. Not so many folks panicking right now about the market. That's a good sign. I'm happy about it. The Dow is up 193. Very good. The Dow is up 193. AI is up 13. GameStop was green again. We went from 2026 now to 2067. Just gained 40 cents. We're green on GameStop. On SoFi, 652. We're down 2 cents on SoFi. The low was 639. We're now at 652. And we might go right into the green with 5 million traded on SoFi in 22 minutes. Welcome to the party, everybody. We are improving here on a number of our favorites. Matterport up 7-8 cents now. We've got Spire up 14. We've got ATIP up 15. SmartRent is up 3. Apple is still down, but only 650, not 7 something. So that's improving. Tesla down $2, not 4. Microsoft up 6. Google only down 180. Amazon is only down 76 cents. We're climbing. Nvidia's up 2, Meta's up 560, Goldman up $5. We got the market turning green here on more issues than before. AI is green now, up 23 cents. Adobe is up. Netflix is up $6. IBM up 220. We got a 350 gain on Uber, 197 gain on Palantir. We definitely have green moving into the market right now. Going forward right at this moment. SoFi 652, 653 on SoFi, down 1 penny. Only 1 penny down on your SoFi. We're about to break even and go up on the session on SoFi. Thank you. Welcome back. 280-point gain on the Dow. We got a buy surge coming in here. A good one. 0.75 of a point gain on the Dow, 0.84 on S&P. We're up a half a percentage point on NASDAQ. We were down 60, we're up 80. That's a 140-point swing on NASDAQ in 10 minutes. VIX is 32.20, down 631. It might drop even more. Good stuff. Nice rally going on. We're green on SoFi, 655. Just went through a moment ago on your SoFi, 655. Just printed a moment or two ago as we are getting buying coming into the entire market. There you are, everybody. Thank you all for joining in and being part of the show today. Hope you're enjoying it. Hope it's working for your option trades. I'm sure it can be. Keep me posted. We'll see how you're doing. 131 thumbs ups. Thanks, everybody. and 267 votes, 78% on the poll say the market will be higher by the end of the year, no doubt. 3-cent gain on the GameStop, 2068, looks like it wants to go to 2070 and more. Intel is up, Tesla is only down $1.80. We got Meta up 650, Nvidia up 270. We got Google up only down 180. Pardon me, Google down 180 at the moment. There you go, guys. AI up 28 now. 289 point uptick on the Dow Jones. Wants to go through 300, I think. Very nice. Apple only down 550. The low on Apple was 201. It's now 203.70. This is moving the Dow. As I told you, if the Apple turns around, the Dow will take a pop because it was the worst performer on the Dow just a little while ago, and we're now seeing improvements here on this index. 278 uptick now on the Dow. Winners still, number one winner on the Dow Jones, a $10 gain for Caterpillar, 3.2% gain. Dow up 2.8, American Express up 2.3, Disney up 2.2, Salesforce up 1.5, Microsoft up 1.5, Nike up 1.5, Goldman up 1.5%, all gaining. On the loser side, Apple is only down 2.7%. Amazon down 0.79. There's nothing less than losing 1%, anything at all on the Dow. We only have 6 losers out of 30 stocks on the Dow. Honeywell's green, Boeing is green, Chevron's green, and everyone else is higher. We're moving up on the Dow, or have been. 297 now is the gain on the Dow Jones. 305 is the gain on the Dow Jones Industrial, kids. There you go. We've got an uptick market going through here. A 42-point gain on S&P, a 79-point gain on NASDAQ. That's a 140-point gain. Now we're up 97 points on NASDAQ. This is a 160-point improvement in 15 minutes on NASDAQ. We're up 0.62. We were down 0.3. That's a 1% turnaround on NASDAQ in 15 minutes. Very good. The Dow's up 0.81, S&P up 0.9. So the markets are all gaining at the same time right now. Giddy up. Palantir kicking ass, says Beach Boy. There you go. It's like I said, we've got, we don't have a loser of a day here. Palantir right now up 196 to $26. We've got Uber up 319. We've got Enphase up 42. Home Depot up 138. Looking at Adobe up $5. AI up 38 cents right now, 24.28. Unity only down 9. We've got a gain on Cisco 53. Goldman up 650. Look at the Facebook shares. Meta up 970. Nvidia up 330 now. Amazon is only down 35 cents. It's about to go green. Google only down 180. Microsoft up almost $7 now. Tesla down 120. That's about to turn again. Apple still down 531. Far better than before. We've come up over $2 a share on Apple. Giddy up, kids. Welcome to the party, pal. GameStop now 2083. That's a gain of 2086. So it's a 20-cent gain from the low of the day. We're up 22 now on GameStop. The low of 2026. Pardon me. 2026 was the low. 2086. We've gained 60 cents from the low in 5 minutes on GameStop. We're at 2090 now. Trying to get back to 21 a share on GameStop. SoFi 655, down a penny or so. Not much to worry about there. Rocket Lab holding a 3-cent gain. Welcome all to the show, to the party. We're following some definite positive momentum on the markets. Taking over from where Japan left off with a 10% gain in Japan. The yen is losing a little against the U.S. dollar. That's helping the carry trade players. The markets are reflecting a gain. We've had a nice improvement on the VIX index, 3260. We were at 55 yesterday. As the worst was 65. We're now at 3250 on the VIX. So that's looking okay. There you go. That's the story. Welcome everyone to the program this morning. Nice to have you here. Interest rates, the 10-year Treasury, 3.8% is where the 10-year is for the USA. The UK is 3.87%. Japan, 0.89. On the currencies, the euro is trying to hold 109.1. It's down just about a third of a penny, maybe. The pound is off not quite a penny against the US dollar at the moment. Asia, like I said, is closed now. Europe is still going down only a fifth of a percentage point, a third of a percentage point. So the London is barely off. The German market, a third of a point lower. France is 0.7 lower. And Italy 0.7 at the moment. So we were seeing improvements on these markets somewhat, certainly way better than yesterday, no doubt about it. At this point, U.S. market, like I said, up 285, 286 on the Dow, 42-point gain on S&P, 87 on Nasdaq. Oil up 8 cents. The VIX at 32.67. Okay, everyone. Welcome to the show. Nice to have you here today. Hope you're making some dough today. Keep the drive alive. Okay. Thank you all for being here. 2070 on GameStop, up about 3-4 cents. There you go. All right. Woo-wee. Alrighty, 134 on the thumbs up meter. Thank you, everybody. Okay, let's go over to here. See what's going on. Headlines. Dow bounces back at the opening as global markets rally following sell-off. Uber posts upbeat earnings growth, sending its stock higher. Caterpillar stock rallies after profit beat, offsets another revenue miss. Lucid gets $1.5 billion lifeline from Saudi Arabia, and Wall Street cheers the liquidity cushion. Let's see what else we got going on. You want to live next door to Brad Pitt? There's a house for sale next door for only $8 million in Carmel, California. There you go. Always opportunities to live next to movie stars, I guess. How about that? Not sure if that's kind of my cup of tea, but hey, whatever you think. Let's see. The thinking here on headlines with regard to Kamala Harris picking Tim Walz, the Midwesterner in recent years has signed into law policies popular with Democratic base. So they're looking him as a moderate figure at this point. Well, we'll see how that plays out, like we say. Interesting. Let's see. Woo-wee. Oh, my. Looking at headlines in the Wall Street Journal, see if there's anything here to worry about, wonder about, think about. Okay. Eurozone retail sales mark a disappointing backslide. German manufacturing orders rise for the first time since 24. These are two conflicting details coming out, data points. Let's see. Jen, how you doing?
Good. How are you?
I'm hanging in there. We've got an update today.
You got an update?
Yeah, we have an update.
Oh, an update.
Yep. And Kamala Harris
we have a rainy day.
Kamala Harris has picked her VP running mate.
Yes, not a name that I recognize.
No, but Democrats do.
And
They're happy.
also, I'm not American, so
What do we care? Yeah.
it's not.
It doesn't matter to
it's no
us
state
in one
I've
way or
been
another.
in.
Yeah, we're not voters. We're just watching the show,
Just watching
kids.
the show. So
And
where is it right
show.
now? What's the market doing right now?
Well, the Dow has been up this morning, barely, and now it got up over 300 at one point. We
Okay.
did lose 1,000 yesterday, though.
Yes,
We have to keep that in mind. Just watching currencies right now, watching what's going on. There we go over there, and let's go over here. We are seeing the Dow right now ahead 330 points, high of the day. We're up 46 on S&P, and we're up 100 points on NASDAQ at the moment, although we seem to be jumping between plus 60 and 120 on NASDAQ right now, back and forth. Oil unchanged at the moment. SoFi, 652.
We have a rainy day going out there.
Is it raining right now? It's a cloudy, rainy day?
Cloudy, rainy. After yesterday, we had a classic summer storm.
Mega storm. We had warnings go off on our telephones last night.
We were in a restaurant and everybody's phone.
Everyone's phone is going, and we're thinking, is it an alert? Is it one of these
Amber Alerts?
Amber Alerts? Yeah. Nope, it's a weather alert. And we're looking out the window going, whoa, those are pretty dark clouds.
And then you look to the other side and it's like, oh, yeah, look, there's lightning over there.
There's lightning and dark clouds, and they're really moving, and hail, apparently.
Yeah. Baseball size hail.
They were talking baseball size, maybe.
The biggest thing that I've heard or seen reported in Calgary was golf ball. But everybody is saying how the alert, and we noticed when because we had finished our dinner and we left, get the car into the garage. People were, I saw the one guy had a sheet of styrofoam that he tied to the top of the car, and people putting blankets and putting your car under a tree, which we don't know if that's a good idea.
That's a good idea, because trees can fall on cars.
And one guy saying the alert gave them time to get the bikes into the house to let the garage have room to put the cars in. Because he said they had golf ball size. Yeah.
Certain parts of the city got hit with heavy hail. We got a dousing of water here, just a ton of water fell.
And the
20-minute
airport
downpour.
The airport ceiling collapsed.
Here?
Yeah. That they're saying, check your flight, make sure it's going, because they've had to close parts of the airport because they got deluged. Yeah. Everything was put on delay until the storm moved out. You don't want to be flying in that kind of air.
We're out of here in 13 days, so we're hoping everything is calm.
Surely they'll fix the hole in the bandstand by now.
Hopefully that tropical storm leaving Florida, coming up the East Coast, will be long gone, and we won't even see it on the Mid-Atlantic, because we're not on a cruise ship, ocean liner, for at least 4 days after we get to New York, so shouldn't have to deal with that.
Yes.
My goodness.
We'll just have wet New Yorkers.
Hopefully not. Hopefully they'll have dried out for a week already. They'll be fine by then. We'll figure it out. We'll be fine, I'm sure. Sure.
Did you have trouble with your internet this morning?
No. But some people said they didn't get their alert this morning through YouTube.
Yes. They've been having issues. I could not get the Wi-Fi said it was hooked up, but it really wasn't.
Oh, I had no problem.
I just couldn't get it to go for a while, and then it finally hooked in.
Oh, no, thankfully.
And,
I'm good.
Yeah, the internets and cables and lines are having trouble because of the weather. Strange things.
For my bagel today, if that's possible.
Yeah, what's it going to be?
Cheese whiz.
See, now
crispy bagel.
I knew it was going to be cheese. I just didn't know what variety of cheese.
If I put the slices on it, it becomes gummy. Where this keeps the bagel nice and crunchy, and I love that roasted sesame taste.
I know you do.
That would be awesome.
Okie dokie. I shall return.
Okay, my dear. Thank you so much. People are saying hi to you, by the way.
Oh, I'll say hi when you come back.
All right, she'll say hi. Okay, Bruce, I'm keeping my lucid beach boy. I want to live next to Alberto. He's a real star. Lorraine, I think the other VP picks are too fiery for her and would show her up. Beach boy, Though that pile dancing in the middle of the night, Beach Boy wonders. Richard, good morning, Auntie Jen, Beach Boy, Auntie Jen. Let's become Alberto's neighbors. Are you game? Lorraine, are you part of the American? You are part of the American dream. You are always in California, Bruce. Beach Boy, mega star. Splayer, all right, before I leave, good morning, Auntie Jen. Wishing you an enjoyable day. Thank you, Splayer. By the way, for MJ Herbal Stocks tomorrow, Aurora announces earnings, looks across the MJ board like people who prepare for another catalyst. Have a good day, all you guys. Bobby, the plastic style of cheese. Yuck. Oh, it's the Canadian style. That's what it is. What can I say? We're up 389 on the Dow Jones. This is a very good move so far. Now 399, almost 400 points. AI is up 35 cents. GameStop 2079. 12, 13, 14 cents higher, a little. SoFi unchanged, 654.55. We're right at the break even. I think we're very close to breaking out on SoFi. 7 million volume in 40 minutes. Not overwhelmingly powerful, which means there is nothing for sale here. I think we're running out of stock. I think it can go higher. Nvidia's up $4. Rocket Lab up 8.8. Matterport up 11 cents. SmartRent up 3. Apple down just $4.50 a share. We were down 7 something, 8 something. Now only down 4. We're climbing back on Apple. Tesla down 138, coming back. Google coming back down 184. Microsoft now up $7. Netflix up 8. Meta up 12.91. Make that 13.01 for Facebook. Amazon down 3 cents. We're going higher. Spiders are up 620. Qs are up 512. Super Microcomputer 608.99, up 16 cents. What a crazy stock that is. Uber up 394. Adobe up 435 right now. Other stocks on the move. Let's take a look here. IBM up $2.80. Home Depot up $2.88. Vanek up $4.60. Goldman up $7.80 now. Costco up $19, $821. That is a big move on Costco today. Good 2.5% gain. We've got Disney up 163. That's 2% higher. DraftKings up 24. Royal Caribbean doing really well, up $12 to 152. This is a nice move today on Royal Caribbean. Why? I don't really know. 8.7% gain, move higher on that one. Interesting. Very interesting moves. Okay, everybody, welcome to the party, kids. We've got some interesting session moves going on right now. The Dow at 39,056, up 352 points. Solid day so far. At the moment, 2070 on GameStop, SoFi 650, Nvidia 104.07. Definitely out of the 90s at the moment. Okay. Let's see. Bobby, a few YouTubers are calling for SoFi pop on interest rate low news next month. Bobby, Noto said, don't worry about the whatever. It's happening. Brian, I know yesterday was a red day, but overall GameStop went up over 10% from the low of the day in the pre-market. So I went for it, and I sold Jan 30 covered calls for $345. Only 9 out of the money. Thank you very much, gamblers. I appreciate this. Well done. A beautiful write. You can write 25s on GameStop. You can write 30s. Take in some cash and buy up more of this stock on the cheap. Why not? Write more calls. Something wrong with that? Nope. Buy SoFi on the cheap if you want, and then get ready to write calls later. Thank you very much. We say option gamblers to allow you to buy your favorite stuff or write more contracts and increase your income immediately. Why not? AI 2416 cash secured puts of 20s, 22s, 24s, 25s might be the move to write cash secured puts on AI. Giddy up, everybody. 2074 on GameStop, up a 9-cent gain. Not getting whacked, not taking off, but not going down either. 654 on SoFi, break even right there. Right at the moment, SoFi is at 654 on 7.3 million shares traded at the moment. Giddy up, kids. Well done, those of you who are taking advantage of this market and its volatility. You can't beat it. You got to say thank you, sir. May I have another? The thumbs up meter now is 142 as we inch a little closer to 200. Thank you all. The poll question has 282 respondents, and it's consistent. The stock markets will be higher by the end of the year. 78% of you are saying yes, sir. Only 22% are saying it will not. So very good. Very good performance there. Thank you all for letting me know your thoughts. If you can answer the poll question, please do let us know. What do you think about that question? Will the market be higher or not? S&P is up 1.1%, 60-point gain. The NASDAQ 0.9% gain, 144 points. The Dow 366 up 0.95% gain right now. There you go. Giddy up all. Welcome to the party, kids. Let's see how this market wants to be playing it. Very, very interesting. Right here, 354 gain on the Dow Jones. GameStop 2075, SoFi 750, 755 in that range right now. Trying to figure out which way to go. I think it should go higher. I think it will. I don't think the selling is all that dramatic. But that's just this man's opinion. You let me know what you think, kids. That's where we're at right at this point in time. All right, everybody? Thank you for being here. Let me take a peek at this quote right over here. Here we go. And let's pop up over there. Microsoft 40102 is where we're at right now. High of the day on Microsoft has been 403 exactly, and 40164 right now. We're holding almost all the gains. 640 gain, 650 gain on Microsoft. Apparently, Magnificent Seven bonds are in demand again, led by Meta. Bond buyers want to buy the Magnificent Seven bonds because of their safety, how cash rich these companies are, with the cash balances being so high inside these corporations, these Magnificent Sevens. Their bonds are quite popular. Of course, not uncommon for the Magnificent Seven to issue bonds to investors because they have their money parked offshore. They can't bring the money back into the USA because they have to pay taxes on it. So they keep their earnings offshore. They raise money onshore by selling bonds to institutional investors. They use the money from the bonds, which are paying very little interest. They use that dough to buy back their stock. And so they reduce the number of shares outstanding by borrowing money, which is a write-off against their income tax. American taxpayers lose again. The money stays offshore. American taxpayers lose again. And the companies get richer. They get richer off the back of the American taxpayer by borrowing money, writing off the interest, buying back stock, and having the stock price go up and keeping capital offshore. It's one of those things. And if the Congress and Senate came up with a bill that said something like, if you bring back $10 billion or more, and the tax rate is 5% on that money, if the 10 billion or more is used to create jobs in America through a factory build out thing, a data center, assembly plant, I don't care. Whatever is used by these companies to create additional jobs for Americans, if they gave them a tax break on that, they might just take advantage of something like that. Because right now, I think it's 32%, 28% tax if you bring it back from overseas. They're not going to do it. And we're talking about hundreds of billions, maybe $1 trillion is held overseas by American corporations that could create hundreds of thousands of high-paying jobs. And we're not talking about minimum wage jobs. We're talking much more than that. But we're at an impasse. No one's going anywhere at this point in time. So there you have it. That's just me speculating. I'm just a guy outside looking in, going, interesting what could be going on and what isn't going on. I don't know. 373 gain on the Dow, AI up 25 cents, GameStop unchanged, SoFi unchanged, Nvidia up 350. We got green everywhere except GameStop and SoFi. They're not taking off. Green everywhere else. These two companies are cash rich, debt poor, growing, in the case of SoFi, leaps and bounds. Stock's dead in the water. It truly is amazing how this market just doesn't reward SoFi at this point. Not at this point. GameStop, they're worth $10 a share cash. Their downside is limited. They're making 4 or 5% on their cash, which makes the company profitable no matter what they do. So there you go. Jen is here. Thank you so much for the old cheese whiz on a bagel, baby.
Yeah.
Giddy on up, kids. We love our toasted bagels. Look at that. Look at the toast on that sesame seed bagel there.
Some people might say that's burnt.
Others say it's roasted.
Others say it's like barbecue.
Yeah.
Yes, everybody has their own definitions.
Some of us say delicious.
Delicioso.
Beach Boy had a question for you. Beach Boy said, Anti-Jen.
Beach Boy.
Let's become Alberto's neighbors. Are you game?
Oh, well, isn't Alberto in New Jersey?
It's in New Jersey.
I'm sorry, New Jersey.
New Jersey. You're not thrilling her to death.
Well, they get that East Coast. They get slammed.
That's true.
See, I still have Storm on my mind. They get slammed.
If Alberto was living in California, in Palm Desert, well, maybe.
Well, there you only get earthquakes.
Well, yeah.
At least a storm, you can see it coming.
But they're dry earthquakes.
But they're dry. That's right. It's a dry cold.
We don't get tsunamis in Palm Desert, okay?
That's what we always say in Alberta, that yes, the winter is cold, but it's a dry cold. Because compared to Ontario and East, where they have humidity, we don't have humidity. We're a desert. It is so cold with humidity. It just goes to your bones. I can take my dry cold.
That's true. That's very true.
I think it's what you grow up with, what you're used to. Yeah, because they come out here and they think it's cold.
True.
Plus, of course, their noses bleed because it's so dry.
There is that.
Kind of dries up the membrane. It's like, why do I have to put drops in my eyes all the time? There's no humidity.
There's no humidity here. It's very dry here.
So they came over 50 mils of rain in like an hour at the airport.
Wow.
Yeah, they just.
That's a
the
lot.
The skies opened up and the bucket poured down.
That's like.
It's like those buckets in the play parks.
It's like 6 inches of snow in an hour. It's a lot of water.
That's a strange way to translate it.
Yeah. Well,
into snow.
Well, yeah.
Yeah. There you go.
For some people, they can relate.
Absolutely.
50 milliliters.
I know.
It's an inch of rain.
No. It's more than that.
Here we go.
I'm looking for a ruler. I have no idea why I think you would have a ruler in here.
You need to use your phone.
But I'm looking for it. I don't have my phone.
I can't help you.
We'll have to use the community in case somebody 50 mils, put it back into Imperial.
It's a lot of water. Isn't 50 milliliters half a centimeter?
No, milliliters aren't centimeters.
Oh.
Right. One is volume, one is length.
500 milliliters is half a liter. 1 liter, 3.7 is a gallon.
Okay.
U.S. gallon.
Okay.
Well, it's more rain than before it came down. How about that? It's rain.
The only one I really don't have any clue in is temperature. I am a Celsius gal now. Because it was every day. It was every day. And so the imperial went away and the metric stayed.
Yeah.
But in like baking and cooking, even at the stores where everything was supposed to be in kilograms and grams now, you still had a pound of coffee. You
Pound
still
of
had
butter.
a pound of butter. A pound of bacon when it used to be a pound. It's not a pound anymore.
True.
But yeah.
A gallon of milk.
So with the pounds and the grams, you kind of get some of each.
Yeah.
Yeah. But
It's
the
true.
volumes, I don't pay attention because I have measuring cups. And so I just find that gauge, wherever it is on it. And
yeah, they've got both.
pour to the number.
There you go. There's that.
Oh.
Howdy Partner says 2 inches. Richard Carley, 50 millimeters is about 2 inches. James of the Misty Tree, 3 cubic inches. Bobby, used football measurements for our American friends.
See?
That's a lot of water. There you go.
It is. And the lightning, it'll get them off the field.
Mm-hmm.
You know it's coming. You know it's getting close because I'm offered the NFL Sunday ticket deals now. It's getting close.
It's happening.
Friday, first game. What? So exciting.
We just had our 9th game of the year for most of the Canadian football teams.
CFL, yeah. For
the regular season. We got 9 to go. NFL preseason is just starting now. So,
but the Grey Cup is, really cold.
Yeah, it's in November. It's in November. We get our Grey Cup out of the way in November because it's winter around here. Yeah, yeah.
Though now we do have covered stadiums.
Oh, yeah.
But
actually,
back in the day,
there's only one left.
Really?
We only have one covered stadium left we use.
Oh, yeah. I was going to
British Columbia.
say BC Place.
Which is the mildest climate in Canada.
Yeah.
It's the only covered stadium left. We had a covered stadium in Toronto. The Rogers place where the Blue Jays play baseball. The CFL, they don't play in there anymore because they can't get more than 20,000 fans in that place.
Used to
they
have
lose money.
In Montreal because of the Olympics.
The Olympic Stadium, that sucker's falling apart at the seams. That is a national embarrassment.
It collapsed.
And there's no one else left. There's a brand new stadium in Winnipeg, outdoor stadium. Brand new stadium in Regina, outdoor stadium.
Saskatchewan has a brand new one.
Saskatchewan. And everything else is, our stadium is from 1960. We can't build anything new around here like that.
And it's actually on university ground. It was the universities. Our dinos. Woo! Calgary Dinos. Woo, 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 woo.
Yeah. Canadians make do with what we got. In Vancouver,
it's kind of
they built the indoor stadium for the Winter Olympics, which
they had to. It had to be.
Why
indoor.
would you build an indoor stadium for the Winter Olympics? Aren't these Olympic athletes?
But it's Vancouver, and you might not have ice.
You know the reason? On the day of the opening ceremonies in Vancouver, 2010, I think it was pouring rain. Because Vancouver in the winter gets rain like Seattle gets rain. It's very little snow. Vancouver held the Winter Olympics. Skiing was in Whistler at elevation where the snow was.
Which is not that far.
Not that far, but it's not in Vancouver.
No.
So all the skiing events were at elevation, whereas
right
the
coast,
ice skating was held in downtown Vancouver where the Vancouver Canucks play hockey. Yeah. And the indoor stadium was used for nothing, just the opening and closing ceremonies. That's the only, and yet they built it. And now it has 9 games a year of CFL football, and they don't sell the upper deck.
No.
They only sell
the
lower deck.
But I bet they use it for concerts and things like that.
Yeah, things like that. But
we're going to get a new stadium. Ooh, no more Saddle Dome.
Well, Calgary's getting a new hockey rink stadium.
Yes.
Yeah. But not for football.
As Peters, what's his name? The Canadian comedian Peters. What's his first name?
Russell Peters?
Russell Peters said it looks like the giant panty liner.
Our existing saddle.
It doesn't really look like a saddle.
Thanks, Russell.
Thanks, Russell. Now I can't get that out of my brain. And then no, he's right. He's right.
Mm.
It does.
Mm. Mm.
Okay, I'm gonna go drink coffee.
You're gonna drink coffee, are you?
I am. You guys have a great Tuesday.
Mm.
Hi, everybody, and
We're up 420 points on the Dow.
Stay dry, stay warm, stay cool. That's
doing what we can, trying to make money in this crazy market. All right.
We love volatility.
It's our friend.
It's our friend.
Or is it? Always be writing. Thank you, Jen.
Bye.
Thank you so much. Bobby is asking the question here. I've got about $2,100. Should I buy 100 GameStop and write a covered call on it? Or should I write a $20 or a $21 cash secured put with my $2,100? Or just hold the cash in case there's another drop? I have so many choices that I can make. Well, I have a suspicion that he's asking this question because he has this money in a TFSA, a tax-free savings account in Canada, and you can't do a credit spread trade. You probably can't do a poor man covered call trade in there either. I'm guessing. So limited choices. So yeah, you buy the stock at 2056, write a $25 call further, out to January and take the premium. Is that where you go with this trade? Let's take a look at this trade. GameStop right now, $20.51 a share. Now, if you're going to write options contracts on GameStop, let's see what you can generate for premium. Excuse me. If you write like an October 2024 call option on GameStop, a $25 call option for October expiry, you would bring in about $250 a contract. If you went further out in time and were to write a January 2025 contract, that's January the 17th, 2025, a $25 contract will bring you $4 to $4.30, somewhere in that neighborhood, against your $20.50 cost. Yeah. For those of you out there trying to figure out whether you should write options or not, this is something to consider. If you already have shares of GameStop, or you can acquire shares of GameStop, if you can buy 1,000 shares of GameStop today, it'll run you about $20,500. You can then write 10 call options against those shares, which would let you write, in this example, 10 $25 calls, bringing in between $4,000 and $4,300. That's about a 20% return on your capital right away. If the shares run up past 25 by January of 2025, you will be exercised, which means they will buy the shares from you at 25 a share, which means you make a profit of $4.50 a share on the stock you bought. Plus, you get to keep the $4+. And in effect, you'll have made $8.50 to $8.80 on this transaction, which then equals about 40% on your money for approximately 5 months. This is August the 6th, September, October, November, December, January. 5 months and 2 weeks is how long you have to wait. You could make as much as 40% on this trade. Worthy of excellent consideration. Now, let's look at this from another angle. You would love to quit your day job. How many shares do you have to bring in enough money between now and January to not work? If you have 1,000 shares, you'll bring in a little over $4,000. That won't be enough to live off of. If you got 10,000 shares, you'll bring in $40,000. Well, that's going to run you $200,000 to buy those shares. A little more expensive than you might want to pay. A little too much capital that you need to be able to generate that kind of capital to live off of it for the next 4 months. Now, if you have 5,000 shares worth about $100,000 right now, you can write 50 calls at about $400 a shot, which will bring you about $20,000 for the next approximately 5 months, which will give you about $8,000 a month in income. And so if $8,000 a month can carry your cost of living, that might be the place you go to. That might be the way to play this game. Use $100,000, buy 5,000 GameStop at $20.50 a share ballpark. Write 50 calls for $410, $420, $425, $430, any in this neighborhood. Bring in $21,000. And we're talking September, October, November, December, January. 5 months. You've brought in $21,000 for 5 months. That's a pretty good chunk of cash. That's at that rate. At that rate, you're bringing in some pretty good cash here. That's not bad. Now, another way to play this is to say, okay, well, I'm not going to buy the shares. I want to play this market, but I want to own the stock doing it. I would rather write poor man cover calls. So what you need to then do is investigate the cost of contracts as far out as you can go. The furthest you can go are January 2026s, and you need to purchase contracts that cost you no more than 90% book value. So can you acquire that? Well, with a $20.50 price tag approximately, a $10 contract will be in the money $10.58. The most you're going to pay for that one is about $11.50, and right now they're going for $12 to $12.10. So that's just a little out of your range. An $8 book value contract, $8 strike price, is book valued at $12.50. Those are going for between $12.10 and $16.65. Last trade $12.80. Those would be 13 or less would be in your neighborhood. So in theory, just theoretically, if you bought $8 call options that expire January 2026, and you could get them for $12.50 or $13 a piece, let's say 13 a piece, that would be in the 90-10 rule. And with $1,300, you could write a contract. Where right now you need $2,000 in cash to write a contract if you buy the stock. Now, if you're going to buy 5,000 shares, that's $100,000. You can write 50 contracts. If you have $100,000 with a $13 contract, you can pick up 70 contracts, approximately 70 contracts, which means you can write 70 contracts. 7 times 4 something is 28. You might bring in $30,000 in capital for 5 months. That might be the trade you might want to pull off right there. That's $6,000 a month. 6 times 5 is 30, as opposed to what, $4,000 a month on the 20,000 trade. So $100,000 will bring you $6,000 a month for the next 5 months if you do it on a deep in the money call strategy. The trick here, and the one stumbling block, is can you buy enough of the 8s to be able to write enough of the 8s that against the 8s. The 10s have 1,900 existing contracts. The 8s only have 208. The 13s, there are 1,400 contracts outstanding for January 2026. The problem is that they're trading at about $10 to $12, and they're only worth $7.70, $7.50. So you can only pay $8.25 for those. And the 15s are trading at $9.50 to $11 something. They're only worth $5.70 right now. These are too expensive to purchase, so you can't buy those. And this is where you might need to do this kind of a strategy on another stock if your game plan is to quit your day job and live off of option income. Now, another strategy you can employ is you can do a credit spread trade on GameStop, where you can either write a put contract against the stock and buy a put, or write a call and buy a call. You can play that game, and you'd use a lot less capital. If you have $2,000 like Brian does, and Brian would be able to write credit spreads, which I don't think he can, but if he could, he might do even at $3 a spread, $3 spread between the contract written and the contract purchased. There would be almost 7 of those. He'd be able to do 7 of those. And now the question is, what kind of credit can you bring in, and how short a time are we dealing with? So those are thoughts. If you've got, obviously, if you're a player with $20,000, you can do 70 credit spread trades, up to 70 credit spread trades, roughly. That might be a very nice income pool for, say, a month or 3 weeks or so. Something to consider. Okay. Cindy B, Uncle Bruce, I have been in a put spread on AMD. It's expiring August 23rd. AMD, let me get that up here, 132.45. Okay. I've got a put spread August 30th, 23rd. It's a 145.55 put spread. Okay. AMD, okay, we're 132 on the stock. I can roll into the same date. I can roll to the same date to a 130, 146 and take a credit for a 102. I have 2 of these stinkers. What do you think? Okay. All right. What am I missing here? You've written a 155 put, and you've purchased a 145 put. Is that what you've done here? In other words, I've been on a put spread on AMD. 145.55, and the stock right now is 132.60. So the okay, why am I having a brain fart here? What's wrong with me? What's wrong with me? Hang on a second. Let me try to do it this way. There we go. Don't mind me, kids. Sleep deprived, Here we go. These were expiring. I think you said August 23rd. Let me double check that. Sorry. Where am I? Over here. August 23, and these are 45.55s. Okay, back to here. August 23rd expiry, Bruce. Right up to there. 145.55. Here we go. Okay. So the 155s are $22.95 last trade. The 145s are $14 last trade. The 55s are 22 something out of the money. They're trading at book. The 45s are 12-ish out of the money. About, they're trading at $14. Now, can you move to a different level? Well, the spread between these two at 14 something and 22 something, we're talking about an $8.70 spread right now on these two contracts. And the question was, I can roll to the same date, 130.46, and take a credit of 102. I have 2 of these. What do you think? What should I do on this? So you need AMD to go up, not down, of course. And of course, AMD has had a real bad run of it lately. Just in the last week, we've gone from 152 a share to here. So these contracts were, practically out of the money, or awful close to being out of the money. Now they're in the money. Not a good thing. Obviously, a month ago, we were at 184. These were well out of the money, and now they're in the money. That's not good. So you need a rebound, a snap rally on AMD. Where are you going to get it? I don't know, if or not. What should you do? I could then do a call spread, but the money just isn't there yet. A put credit spread, bought 145, sold 155. Okay, hold on a second. Okay, yeah, right. That's right. 155 sold and bought 145. Okay, I don't know what your credit was versus what it is. So I'm not sure how down you are. I'm assuming though you're down on this trade. The spread has widened because the contracts are in the money. You have a maximum $10 loss on this trade times two. It's a $2,000 loss that you're looking at, less the credit you've already received. Right. The credit you already received, I don't know what you got, but I doubt it was phenomenally high. I'm guessing. I don't know. So what to do if you go forward in time? Cindy, credit was 686 for the two in total. So you had a $2,000 risk, and you brought in 686 against it. Your risk level is now $1,300 something, right? 1314 is what you're going to lose. Worst case scenario if both contracts are in the money. Got it? Obviously, if the shares were to recover into the 145.50 level, you would probably break even closer to 150. Because your risk now would be down to only the contract that's in the money. Now, going back to my thought, you could consider writing the same contracts, or perhaps a little closer to the money by going forward in time. Now, that would, I think, mean you'd need to go to September, is my hunch. How far is the question? But I guess I'm going to look at it this way. Yeah, you got about a 340 credit per contract. You got 680 total. So yeah, you are in need of reducing this loss, if at all possible. Looking at 135 puts and 145s, to write a 145 will now bring you maybe 1650, and a 135 will cost you 10 something. So this would be a 650 spread against the $8 something spread you have right now, which means you will lose $2 but still be ahead on your overall credit spread, because you did bring in three something dollars on the original spread, 340. You might have $1 left over. That might work. If you go 140, 130, you might bring in $13 and spend a little over 760. That's about a 550 spread, which would eat up your entire credit, but you'd have a break-even move with a 130.40 market out to now September expiry, September 6th. Obviously, if the shares were to just go to 140, that would put your 140s at zero. They would be worth absolutely nothing, along with the 130s at zero, and these would expire worthless, and you would then walk away without any damage at all. If the shares were to hit 141, 142, obviously that just adds to the fire. But the best case scenario on this example, if I'm reading this right, is strictly a break even, and that sounds like a plan. Says Cindy. So yeah, check out these trades. I don't know if you can go further out into September to actually get a bigger credit your way. Is it possible to get like a 650 credit with lower strikes against your 340 credit that you originally got? Can you only lose, say, $2 of the 340, still have a 90-cent positive on this, and bring your strikes low enough so that the stock doesn't have to do much of anything for these to be worthless for you? It's just that time is what you have to give up to make this trade happen. Right now, you don't have to do anything today because it is the 6th of August, which means you can do stink bids and stink offers on this transaction. Try to get the best fill you can, both ways, getting out and getting in. But if the shares would kindly give a little rebound your way, with this market having done what it's doing, you're not getting the rebound. We're up 500 on the Dow, and AMD is still down on the session. I mean, talk about not giving up any ground here. It's not giving us any, giving you any credit. It was as low today as 129. It's now 132.70. So it's come back 360 a share to here. if it would give another 360 gain from here and be up $1.60 on the day, that would take a little more heat off of your trade. You're still in the money, though. Let's not kid ourselves. But the higher the shares would go, the better the trade might work for you on a rollover. But it's the 23rd is your timing, which is still 17 days from now. And so you're able to watch this trade to see just how this plays out. Was 129 really the low for now? Is this stock like yesterday we got it down to, what was the low on that? Wow, it was 124.98. Now we're back to 132. So you've seen an $8-9 correction. Can 789 more come your way to get you into this 140 neighborhood? And gets you, a lot closer to where you want to be to look forward to a rollover that may not have to be as severe. You may only need to move $5 on each contract or closer to the market. You know what I mean? So you've got some work to do. Yeah, yesterday AMD went up, and today maybe it'll go up some more. We're up $6 on Adobe. We're up $4.60 on Uber here. This is looking good. And other stocks, like, of course, Nvidia being a chip maker, up 530 here. The Dow up 517. This is helping. AMD just has to want to become part of the program. And the question is, could it pop $4, $5, $6 again today or tomorrow and get closer to this 140 level, which gets within striking distance of that 150 range? Again, you've got a ways to go. There's no, you've come a ways, but this stock is capable of so much more. But at the moment, you're gambling. But you're gambling on a limited basis. You've done two of them with $1,000 spread per, less the credit. Your worst case scenario is where you are now. No matter how low the stock goes, you can't lose more than $1,300 on this trade. The losses are locked in, and so you've got another week to fold your arms and see if the stock wants to climb. And if it does climb, then perhaps the loss will shrink into 800 range, 600 range, more palatable, or an easier rollover. Okay, but yeah, Cindy, if you can do a rollover into this time frame or 2 or 3 weeks further forward, and bring your strikes closer to the market, right? Lower on these strikes, and we get a gain back to 140.45. Boom, you've got the win. So yeah, you've got some checking out to do there. Okay. Third Friday of September might be the best contracts only because of liquidity. They might have the best liquidity versus what we're looking at right now. September 6, September 13, September 20. There we are. That's the third Friday of the month. And I see the 130s are 850, 860. Last I see, 140s are 1370, 1385. Much tighter spread on these contracts that you might roll into instead. So that might be where you go on the 140s. You write those, you'll bring in 1375, maybe 1380, and the 130s will cost you 850, 860, something like that. So that is a 520, 5 to 520 spread available to you on that trade. For two of them, that's $1,000 of credit. Where right now, you're looking at an $8 position against your credit. No, with your credit. Pardon me. Don't mind me as I'm trying to brain fart this through here. But you got your calculator, you got your pen and paper. Check it out. I would definitely look at the third Friday of September as the candidate to roll into. Definitely, and no one else. That's what I would do, and just see what kind of credits you can muster up to pull off that trade. Okay, whether it's today, tomorrow, Thursday, you definitely have a week to make this happen. Still, I hope that helped you. Okay, everybody, thank you. Okay, let's see here. Yes, yeah, yesterday it went up. Okay, thank you, Cindy, for sharing. If any of you have this kind of a scenario in front of you, send me a private email if you like. and I'll look at those for you, and I'll check out the contracts as best I can from here. Share you my thoughts on what your options and choices could be as to how to rectify that trade. At the moment, we are up 540 on the Dow, which is half the loss from yesterday. S&P's up 89. That's 1.7% higher on the S&P. NASDAQ is up 273 points. That's 1.7%. Dow's up 1.3%. So these three markets are all higher. The Dow was the winner by itself. Now it's the laggard of the recovery. That's interesting. Oil up 83 cents at the moment. And so we're watching that carefully. We got AI up 36 cents. GameStop at 20.93.94, up 29. SoFi down 3 cents. Nvidia's up $5. Rocket Lab up 13 cents. Matterport up 13 cents. Apple is only down 227 at 207. We've definitely got a recovery going here. And we're near the high of the session on Apple. This is definitely helping the Dow and is encouraging other stocks to go up. Tesla is only down 228 at 196.60 or so. Google is up 20 cents now. Microsoft up almost $9. Netflix up 9.70. Meta's up 21.50. And Amazon up $1.42. So we've definitely got five of seven Magnificent Sevens higher, with only Apple down and Tesla down, and they are improving right now. And Apple is at near its high of the day at the moment. So if this continues, again, momentum begets momentum, and the Japanese market gained 10% today. The Dow wants to gain 80% of what it lost yesterday. It'll be up 800 points. We're up 500 right now. The Dow has another 300 to run to just match Japan's performance. And the Dow wasn't the problem. The Dow exchange wasn't the problem. It was Japan that was the problem. Anyway, there you go. That's the story. I'm sticking to it. We'll keep an eye on that from this end over here. I know you're watching it from that end over there too. Thank you all for being with me today. 2 hours, 26 minutes for this show. Thank you all. Make money, get richer. Thanks for the poll question participation. Thank you for the thumbs ups today. 157 so far. Rerunners, up to you to get us another 43 thumbs ups and get us to 200. We've had 307 people answer the poll question today. And 78% of those people say the market will be higher by the end of the year. Only 22% believe the market will be lower. Thank you all for helping out with the channel today, for thumbs ups and the poll question. I appreciate it very much. Have a wonderful rest of your session. Get richer, please. And let's see how things work out going through the rest of this day into tomorrow. Okay, guys? We'll catch you first thing in the morning, all. Thank you. From Calgary, it's Bruce and Auntie Jen saying, neat, 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 like James of the Misty Tree. Absolutely correct. Thank you all. Have a good one. Bye for now.